Welcome back to Trading 360. I'm Caroline Woods in for Nicole Petalides. It's time for the big three stocks, three charts, three trades. Rick Ducat is here to take us through the charts, and here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. Rick and Scott, great to have you both here. Scott, let's start with you, and before we get to your trades, I want to get your thoughts on the market, because the major average is mostly lower. The Dow is attempting to rebound a little bit, but only up about 67 points right now. What do you make of the downside that we've been seeing? Buying opportunities or more weakness in store?
I think longer term, it is going to wind up being a buying opportunity. But right now, Caroline, everything is a sell first or sell the rally. You know, we're no longer in that buy the dip. We're in the sell that rally. And until I think things start to get clarified a little bit, coming out of the administration here, this volatility is going to continue. I do think there are pockets where, you can pick and choose where you want to be right now. But again, I'd caution that this is more of a sell the rip than a buy the dip marketplace. And that can change anytime.
Okay, well, we're certainly seeing investors selling the rip in your first trade, and that's Palantir. Shares down about 9% right now. Still really impressive gains so far, but now down about 26.5% from those all-time highs. Tell us about how you're approaching Palantir.
So this is one of those stocks that people are, just taking their profits on. And to me, there is a select area where I want to buy it. It has been working lower since the news of budget cuts, for the Pentagon, some insider selling there. And that insider selling news is actually better than expected. And I think this is now going to become a valuation play if you can say that, trading at X amount of earnings is a valuation play. So what I'm watching for is down around the 85 range for a big bounce. We're not quite there yet, but that is a gap fill, and also the 50-day moving average. And if you look at a chart, I'm sure Rick is going to point this out, that was an area of past major resistance, which now could be some really significant support. So that, to me, is a great pivot level if we get down to that area. Right now, kind of in no man's land, so I'm not doing anything here, but I'm watching for that 85 level.
Okay. All right. I should note that Palantir is currently trading at 92.29. This is the first time that I've checked the median price target of Palantir, and that it's been higher than where Palantir is currently trading. Analysts finally have it at $95 per share. Still only 5 buy ratings on the street, but for the longest time, it was basically half of where Palantir was trading. So, Rick, when you take a look at the chart here for Palantir, we have Scott's $85 target. We have the $95 median price target, the $92 where it's currently trading. What stands out to you?
Yes, the $85 level, roughly that's the major level that I had my eye on as well, for many of the reasons that Scott described. So to start out with, you can see here this light green line represents this double top type of price action that we saw here right around 84.85. So that was kind of what Scott was referring to. I don't happen to have the 50-day simple moving average, but I do have the 63-day exponential moving average in orange here. That's also quite close. It's just below 84 or so. So there's quite a bit going on in that area that makes it really stick out as a potential source of support there. If we were to keep moving lower beyond that, price has been traveling within this upward sloping channel ever since our last earnings event, or rather I should say the earnings event before our last one here back in October. So mostly we have been sticking within those boundaries. We had our gap up on our last earnings. We topped out near 125. Now we're back within familiar territory, this old channel that was established here as price tries to find some footing and perhaps regroup. We can see that RSI, notable interruption after a little bit of bearish divergence there where price made a new closing high, but RSI did not follow suit. Now we are out of the overbought area and below the 50 midline. If we were to look at our volume profile and standard deviation channel studies here, we can see that there's not quite very much volume at all near where we are now. Kind of there's a gap right here, a no man's land, I believe was the term that we used before. Volume starts to pick up again near about 70 or so, and then not really much notable activity to the upside, but our +1 channel could be potential resistance near 107, and our old trend line matches up with our volume node near about 70.
Okay. All right. Scott, let's move on to your next trade. That's Roku. Shares of Roku off to a strong start in 2025. Basically flat today, but up 7% this month, up about 20% so far this year. Tell us about your trade for Roku. Are you selling the 20% rip?
Well, here's what I'm doing. It's where I'm looking for similar area as in Palantir, and the stock has fallen from its recent spike from earnings, and it's right at the gap fill level from right before earnings. So, that 87-ish area here, absolutely need to watch that for a pivot. It also has some downside protection below that, Caroline, at 86 and 82. So this is probably an area, in my opinion, that sellers are going to give up, buyers are going to jump in. So this bounce, if there is a bounce, I could see this taking back up to close to 100. Now, option implied volatility in Roku is actually very low right now. There's not many stocks out there where we're seeing lower implied volatility. So because of that, I'm looking to buy an upside call spread. I'm going out to March expiration, looking to buy the 97.5 call spread for about $2.
Okay. All right, Rick, what do you see in the chart for Roku? Because to Scott's point, it is about 15% away from the 52-week high, so it's definitely dipped from the earnings pop, but still an impressive run-up, at least this year. But zoom out and don't compare it to 2021 levels, right?
Yeah, it all depends on where you start looking, I suppose. And for this chart, though, for the purposes of our examination of the past year, not really too bad at all. And you can see that we did have this slump here during the earnings event that we had during October. Very heavy volume here, but we did manage to fight our way back up. Price formed a rising wedge type shape here, typically regarded as a little bit more of a bearish outlook. It did not play out that way, though. During our last earnings event, we had a big push to the upside that stopped just shy of 105. Now price has, like our last chart, retreated back within the confines of our old pattern from which we broke out initially. Now price is touching on another old resistance level that is now supportive, this horizontal green line near about 86. That was the old, roughly where we topped out in terms of our highs. We did have one outlier there. But this 86 level also lines up with our yellow 21-day EMA. So this could be a key level to hold on to as we progress through this, the beginning of this trading week here. RSI still bullish. If we were to look at our standard deviation and volume studies here, we can see that there's not really a lot of notable volume nodes until you start getting all the way back down here near 82 or around 76 or so. So perhaps not what the bulls would want to see in terms of strong volume activity, but those are some areas that do stick out. To the upside, our old trend line, our upper boundary rather I should say, matches up very closely with our +1 standard deviation channel near about 92. This could be a point to watch as well.
Okay. All right, Scott, final thoughts on Roku and your trade for that?
I really like the upside, and I like the upside using a call spread rather than selling a put spread because option implied volatility is actually pretty cheap.
Okay. All right, Scott, your final trade is ZScaler. Shares of ZScaler under pressure once again today, down about 2%. Tell us about your trade for this one.
Absolutely. And, tech stocks obviously got rolled on Friday. ZS was not immune to that whatsoever. And that stock has come right down towards its 50-day moving average here. So if this holds here, I'm looking for a rebound probably to the 205, 208 level if it finds that support here at the 50-day. The 200-day moving average is actually not too far below either. That's around 187. This sector has been one of the best performing so far in 2025. I expect to bounce near term. Now, the difference between this and Roku, where Roku had really inexpensive option implied volatility, ZScaler, it's actually very expensive. They have earnings next week. I don't want to touch a trade for earnings. So what I'm looking to do, because the option implied volatility is so expensive, is sell a put spread this week. So what I'm doing is selling the 195, 185 put spread. Yes, it is slightly in the money already. It's about $4 that I can collect on that, and I'm looking for a quick bounce this week.
Okay. All right, Rick, what stands out to you in the chart for ZScaler?
Perhaps the most sideways of our charts that we're looking at today. We can see that for a while here, we have established rather clear boundaries. We had our green line at these lows near 180, and then our red line at these highs near 216. That's roughly where we stopped out last time. I think you could also perhaps make the argument that starting with the high point that we saw after this gap down, you could connect the subsequent highs. You could kind of have either a horizontal level or a very modestly downward sloping trend line that line up very close to each other. So that this area near like maybe 215 to 216 holds some extra weight in my opinion because of the confluence of these two lines. And remember, these lines are kind of subjective. Different people may draw them in slightly different ways. So just kind of keep that in mind as you go forward. But this is one point where a lot of people might be matching up with the various types of drawings they could make to inform their outlook here. So now as we look a little bit closer here, we can see that price is slipping through our moving averages. We've given up the yellow 21-day during the past few sessions. Today it looks like we could lose the orange 63-day as well and potentially close below it. So that would be a more bearish sign. RSI also trailing off below the 50 midline, a more bearish lean now after our green trend line was interrupted when we hit that resistance near 216. So to look once again at our volume and standard deviation channels, we can see here that our volume profile point of control comes in right around 200, very close to our orange 63-day EMA. Purple 252 channel is a little bit lower, near our 252 EMA, excuse me, near about 190 or so.
Okay. All right, Scott, just finally to wrap things up, all three of these names outperforming the broader market so far this year. But if you take a look at the tech sector overall, it's certainly underperforming. It's now joined the consumer discretionary sector in negative territory for 2025. As you think about market leadership through the rest of this year, do you think tech will become a leader again, or is this kind of the new norm, the defensive sector is outperforming?
Defensive for right now, Caroline. We always go through ebbs and flows in the marketplace, but if I had the crystal ball to project out what's going to happen 9 months from now, I would say tech would be the leader here. Obviously, a lot is going to depend on rates, what the Fed does, inflation. Lower rates are really, a big benefit to the tech sector here, but I do think they will outperform.
Okay. Scott Bauer, Rick Ducat, thank you both so much for the trades and the charts.